Japan's most actively traded stock is a colossal fraud and ticking time bomb reminiscent of Olympus, Toshiba, and other infamous accounting scandals according to Scorpion Capital. They're short Lasertec, one of the largest corporate frauds in Japanese history and easily the largest outright fraud in the world by average daily volume. Lasertec trades in Tokyo under stock ticker 6920 and it's worth $23 billion today. Depending on the week, Lasertec's trading volume is in the top 10 globally at $3 to $4 billion a day, on the leaderboard with Nvidia, Tesla, Microsoft, Google, Amazon, and Meta, making it one of the biggest stock bubbles on Earth. Volumes have gone down recently but remain around the $2 billion mark in their average last 3 months and $1.2 billion in the last week. The longtime CEO Osamu Akabayashi abruptly announced his resignation a few weeks ago, having run the company for the last 15 years. He did that on the same day as earnings with the stock near all-time highs, typically an ominous sign and one of the most reliable indicators that the end is near. In one major corporate fraud after another, we see the CEO or CFO departing when the scheme becomes too big to sustain. Akabayashi provided no explanation for the unexpected timing. Founded in the 1960s, Lasertec was a small, obscure supplier of basic measurement and inspection equipment, with revenues between $30 to $100 million for most of the 2000s. But now it's hailed as Japan's ASML, the largest semi-cap in the world with a $377 billion market cap. It struggled the entire decade prior to its EUV product launch in 2017 with mediocre margins and no growth, trading at just 1 to 2 times revenue as a penny stock, around 50 cents to $2, unable to exceed a $50 million to $200 million market cap. Then out of nowhere, the stock spiked 100 to 200 times since becoming an EUV story, depending on the baseline data, making it the best performing stock in Japan in the last 5 years, 10 years, and the 6th best in the world, greater than a $5 billion market cap over the last decade. It increased by 1,700% in the last 5 years and 16,000% in the last decade. Lasertec is the most actively traded semi-cap equipment stock in the world, despite having a fraction of the market cap of ASML, Applied Materials, Lam, Tokyo Electronic, and KLA. On some days, it trades 10 times the dollar volume of ASML, the world's largest semi-cap player. Its multiple is equally up there. At 17 times sales, it eclipses all of the leading semi-cap suppliers. Lasertec for most of its history was a micro-cap marginal supplier with no money for R&D. Yet now they claim to have a monopoly with their Actinide EUV mask inspection tool, its claim to fame, magically copying a technology that took ASML 20 years, $10 billion in investment, and 1,000 engineers to develop. Sounds too good to be true? Scorpion Capital undertook an intensive 5-month investigation encompassing over 20 in-depth research interviews, typically 60 to 90 minutes each. They performed roughly 20 investigator field visits to Lasertec's new Innovation Park and an extensive review of the scientific literature on EUV light sources and actinic mask inspection. Their sources included 6 contacts at TSMC and key executives at Intel, Samsung, GlobalFoundries, and Marvell. Additional sources included 4 Lasertec and other field engineers working full-time on its Actis EUV systems, 2 of the leading experts in EUV source development, and multiple industry executives in Japan, including 2 in touch with Lasertec's CEO and many others. Lasertec is an extreme textbook accounting fraud that checks off every box, claiming to have the highest margins in the industry but alarmingly little cash flow, and the lowest cash conversion among its peers. This is accompanied by the highest inventory level of any semi-cap equipment supplier in the world. The warning signs are classic, firing their longtime auditor right when the anomalies first appeared, secrecy as evidenced by vague disclosures in their financial statements, and terse evasive replies by the CEO and CFO during quarterly Q&A. Lasertec's new Innovation Park in Yokohama is a brazen fraud, a purported R&D and production campus with 2 supposed fabs that's 5 times the size of its headquarters. The next phase of its expansion, announced in 2022, is the largest capital expenditure in its history. Scorpion Capital's investigators visited 20 times from December of 2023 to May of 2024 and found a generally deserted facility with no R&D or production activity, directly contradicting the company's claims and suggesting its promotional pics of the fab are fake. This is based on extensive surveillance, including site interviews, weeks of 24/7 time-lapse, and motion detector camera footage and aerial drones. Overstated revenues and earnings are at the core of the fraud, offset by improperly valued inventory. These inventories have a looming inevitable 65 to 70% write-down and impairment charge, a loss that would wipe out 70% of its cumulated earnings since the launch of its flagship Actis EUV system, and wipe out 85% of its retained earnings. In other words, its parabolic stock rise has been based on an illusion. The stock will far exceed what Olympus incurred and is considerable versus Toshiba when their frauds were exposed. Lasertec purported margins that are so high that they significantly exceed every one of the 5 largest semiconductor equipment companies in the world by revenue, even eclipsing ASML, which invented EUV lithography systems and has a monopoly. Lasertec's margins are so astonishing that they exceed Apple's at 30%, Google's at 29%, and Facebook or Meta at 37%, and they're on par with Microsoft at 42%. These spiked from 28% in 2019 when it launched its Actis EUV machine to 41% in 2023. With margins far higher than the 5 largest semi-cap companies, one would expect Lasertec's net income, the earnings reported on an accrual basis on its income statement, to convert to a copious amount of operating cash flow, and at a high rate given its high margins. But therein lies the key to the fraud. While Lasertec claims to have the highest profitability, its cash conversion is the lowest. That's a striking anomaly at the center of the largest corporate frauds in history. Cash conversion has plummeted since the launch of its Actis EUV line in 2019 and 2020. Over the last 5 years, $1 of its earnings has produced only 65 cents of cash. This is in contrast to its peers, which have extraordinary cash conversion. ASML has 130 to 180% conversion despite margins far lower than the ones Lasertec claims, and KLA has greater than 100% in all but one of the last 5 years. Lasertec's cash conversion has dropped sharply over time, particularly over the last 2 years, collapsing even farther in the last 2 quarters at only 30% in December of 2023 and 28% in March of 2024. This is in addition to exhibiting troubling volatility. It's a typical progression in frauds with a high-flying stock and pressure to show rising earnings, which requires the accounting fraud to get larger every period until it becomes unsustainable and collapses. Aside from the unusually high margins and missing cash flows, the anomaly that drew Scorpion Capital's focus was the alarming level of inventory, $1.1 billion. It's a figure that's barely fluctuated in the last 6 quarters, itself a sign of a fabricated number. Lasertec's absolute level of inventory has gone parabolic. It's highly abnormal as a percentage of revenue versus its historical trend. Inventory levels began to spike right when it entered the EUV market, hitting a preposterous 120% to 135% of revenue in some recent quarters. It hit its highest level in the last 2 quarters as a percentage of assets, and it's the most inflated inventory level of any semi-cap supplier in the world. The company has no explanation versus the 5 largest players. It's triple or quadruple ASML, Applied Materials, Lam, Tokyo Electronic, and KLA, even though they all make complex, long lead time tools. The origin of the accounting fraud: Lasertec's flagship Actis Actinic EUV mask inspection machine is defective with a fatally flawed EUV light source. That's the core of any EUV system. This is only in addition to insurmountable problems with other key components like the optics and mask stage. Shockingly, Lasertec has a $23 billion market cap as an EUV story without an EUV technology that really works. The new Actis A300, announced with fanfare in November of 2023 as Lasertec's next generation EUV product and driver of growth, is a purported hoax. A cover story to conceal fatal flaws with the EUV light source in its flagship tool, the A150, and the resulting costly replacement and recall crisis. The company's EUV story and its stock would have collapsed had it revealed that the source and the foundation of an EUV system was defective. This had to be hastily and secretly swapped with one from a small 12-person Russian R&D project called IZTEC, which is misrepresented as an in-house Japanese technology under the name Urashima. Lasertec's largest customers, notably TSMC, Intel, and Samsung, which are 77% of its revenues, are struggling, exasperated, and furious with its EUV mask inspection system. It's come to the point that TSMC has ceased buying its EUV machines, and the key Intel executive in charge of Lasertec's tools has been allegedly banned from meetings for blowing up on Lasertec due to his anger at the tool's failure. Key customers are really struggling about what to do. It's painful, extremely painful to use Lasertec's tools. It would be stupid to buy more machines. One of Intel's most senior and tenured executives with a leadership role in EUV confirmed that Lasertec's EUV source is not a well-controlled process. It was painful. If you choose a bad technology, you just can't get there. Intel's mask operations VP confirmed the struggles. There are struggles at TSMC also. The world's largest chipmaker's experience with Lasertec has been a disaster, not only with its Actis EUV systems, but also with its outdated previous generation DUV tools. Multiple sources, including TSMC's ex-head of R&D, a procurement executive who first brought Lasertec into TSMC, and the head of TSMC's mask shop, one of whom laughed at Lasertec's tools, indicated that TSMC stopped buying its Actis machine years ago. They said tools were so unreliable that masks require parallel redundant inspections with older tools. At its best, Lasertec makes niche laboratory R&D tools unsuitable for fabs. There are struggles at other customers too, such as Samsung, Marvell, and Global Foundries. The latter ridiculing the quality of Lasertec's EUV tool and ceasing new purchases in 2021, calling it just unacceptable with a problematic light source. Global Foundries blasted the tool as not as sophisticated or as capable as the classic DUV KLA mask inspection tools. They mocked their A300 announcement by saying no question it sounds sketchy, and confirmed that other customers are equally frustrated and disappointed and are refusing to take shipment. As a sign of Lasertec's urgent situation, Global Foundries stated that the senior technical people from Intel and Samsung recently flew to Japan to express their concerns with the equipment. Marvell stated it has no interest in further Actis purchases. ASML echoed the same problems that we're seeing, expressed skepticism of the A300, and revealed that Lasertec offered them 75% discounts in a desperate attempt to offload inventory. They recently saw high levels of inventory piling up at Lasertec, which led them to question their inventory valuation and accounting. Lasertec customers who have recently visited its headquarters confirm seeing highly unusual levels of inventory. It's pretty scared, pretty weird. And other red flags. Their factory floor for finished goods is full. A substantial amount of finished goods inventory that's either not past evaluation or customers have deferred shipment. There's literally no space left on their final inspection bays before the equipment ships. Research sources indicated that the customers are refusing to accept shipment of tools. This hasn't stopped Lasertec from recognizing revenue for prepayments of systems that aren't yet shipped. Most of their initial advances and purchase orders were from Intel and are being pushed out. These likely will never be filled, with Intel allegedly trying and failing to pawn off purchase orders to TSMC. Lasertec is misclassifying inventory using tricks that any supplier can play. They're inflating the value of inventory, meaning they're going to have to take a significant markdown. They haven't taken any impairments, and they don't want to record a hit on their gross margin. They also have detailed aggressive, questionable discounts, trade-ins, inducements, and concessions that Lasertec is quietly offering customers, as well as reimbursement for the loss of time of use, due to its Actis tool's defects and lack of uptime. KLA's impending launch of an EUV actinate pattern mask inspection tool will be catastrophic for Lasertec. Scorpion Capital spoke with 3 KLA sources as well as senior individuals at Intel, TSMC, Samsung, and Global Foundries, and others. They all indicated that KLA's tool is likely coming in 2025, has superior technology, and will destroy Lasertec's market share. That's hardly a surprise given previous short-lived monopolies in semi-cap equipment that collapsed overnight when leapfrogged by a new entrant. Customers irate with Lasertec are begging KLA and crying for it to hurry its launch. KLA's entry will be devastating, catastrophic, and game over for Lasertec, which will disappear. Everything could turn around in a second. They're out of business, basically. KLA's tool uses a superior EUV source technology and is specifically timed for the transition to high NA, for which Lasertec has no capability. KLA is in the pole position given Biden's CHIPS Act, which is placing pressure on Intel, TSMC, and Samsung to buy from KLA. This comes from the tens of billions of dollars in US subsidies they were just granted, which sources called a seismic event that spells major trouble for a Japanese supplier like Lasertec. Lasertec's EUV tool is so defective, unreliable, and lacking in throughput that TSMC, Intel, and Samsung have all quietly substituted non-EUV alternatives for inspecting EUV masks. They've improvised with KLA's legacy Teron DUV tool plus electronic beam inspection. It indicates that actinic EUV is useful if and when it works, but it's not essential and certainly not a monopoly that justifies Lasertec's absurd valuation.